Okay, hi, welcome all. Today we will talk about the biggest mistakes beginners make in the stock market. So you might find some relevance with the risk management video that I have shared previously, but this also has some important topics that you need to focus on. Okay, so before I start, here is a disclaimer. I am not a SEBI registered advisor and the content here is for educational purposes only. So what all topics I will be covering today? So it's about investing without a plan, what happens when there is a hike, risking too much on one idea, so refusing to accept the losses and so on. So let's start. So when you start investing, right, so you don't lose money because you are unlucky, or I lost money because I did not understand what I was doing, right? But the most painful part is, so most of the mistakes what we do, so it can be completely avoided. Okay, so that's why there is a quote by Warren Buffett that says, risk comes from not knowing what you are doing. Okay, so if you know like what you are doing, so definitely you can avoid that risk. And that's exactly what this video is all about. So this is not to scare you, this is not to hype you, but this it is making sure that so this video will help you to prepare yourself, because if you avoid these mistakes you are already ahead of most of the people. Okay, so what are the mistakes that we actually do? So, mistake one, investing without a plan. So, most beginners, what they will do, so they enter the market with an excitement, or they would have got some tip from friend or from some social media groups, or there can be a number of reasons which gets them excited, but there is no structure. So, they don't define, so they don't know why they are investing, so they don't know how long they will be investing, so what is the level of risk that they can tolerate. So without a plan, every market move feels like a danger. So as the saying goes, so if you don't know where you are going, so any road will take you there, right? So it can reach, it will make you to reach early, late, it can take a number of days. Similarly, in the stock market, that road often leads to losses. You can also see the picture. So what happens when you don't plan? So there should be proper planning from both the sides, or you will stuck in the middle. So that's why you should know like why you are investing. So how long you will be investing? What is the level of risk that you can tolerate? So if you have this plan, then you should invest. And what is the other mistake that we will do? So we just follow the hype. So what I mean by hype here, hot stocks or the trending topics or social media buzz. So beginners often buy because everyone is buying in the market. It is all always, it is all available in social media, and that is a trending topic everywhere. But here is something that you have to learn, because I have learned this very hard way. See, by the time everyone is talking about that stock, which means the job opportunity is gone. So excitement might feel like a confirmation, but the excitement is not a strategy. So if your reason for buying is everyone else is buying, then you don't have a reason. Even you don't have a reason, which means you need to avoid it. So that is what I mean. So following hype, so you should make sure that you don't follow the hype. So if you have a valid reason along with following the hype, then it makes sense, but without reason, no. So what is the other mistake that we do? So risking too much on one idea. So this one definitely hurts. Putting a large percentage of your capital into one stock, confidence without risk control is very dangerous. So there is an old investing principle which says never risk what you have and need for what you don't have and don't need. If one position can significantly damage your portfolio, so you are not investing, so you are gambling. So that's why I also gave an example in my risk management video, where I have shown clearly how you should utilize your capital and how much you should risk. If you want, you can also go back and see that risk management video. So never risk too much on one idea. So you should definitely do diversification. So what is the other mistake the beginners do? So they refuse to accept losses. So what it means, because it is our ego. So we don't let go our ego. We think that if we just exit, it might be hurting your ego. So that's why you feel you will hold it and you will hope that so it will come back to your price. But definitely market doesn't care. So telling yourself it will come back, sometimes it might come back if you are very lucky, if you have a proper strategy, but most of the times it doesn't. But here is something powerful. The market doesn't care about your purchase price. So it doesn't know it, so it doesn't respect it. So discipline means adjusting when the facts change. So you should let go of your ego and you should exit the market if you feel that so it is going opposite to your idea. As I said, markets doesn't care. So you should know when to care, when to stop, and also don't hope in the market unless and until you have your standard or proper strategy. So what are the other mistakes that we do? Watching the charts constantly. So even I used to watch the charts constantly. It did not make me smarter, but it always made me anxious. So there is a simple that's a simple truth. The stock market is a device for transferring money from impatient to the patient. So that's what even Warren Buffett says. So constantly monitoring feeds impatience. So serious investors, what they will do is they will zoom out. So they don't watch the market if they are very long term investors. They don't check the charts daily. But if there is some kind of an anxious information is going on, definitely they will come back and do it, but they will not do it every 15 minutes, 1 hour, or most of the times not even every day. Okay, so that is other mistakes what beginners do. Okay, so trying to get rich quickly. Yeah, so what it means, if you look closely, none of the mistakes are technical, so they are all emotional. So they are because of fear or greed or ego. Okay, so you if you want to get rich quickly, so this is not the place. And market rewards patient, so it doesn't rewards urgency, it actually punishes urgency. So that's why you don't come with that mindset trying to get rich quickly. So now imagine this at any moment. So what is happening? So retail investors, they are reacting very, very emotionally, and traders are analyzing patterns. Institutions are allocating in billions. Market makers are keeping liquidity alive. So price is not the random. So price is result of all them interacting. You should let go your ego, you should let go your if greed, you should not fear in the market, you should not be impatient, because investment is not about the study of finance, it's the study of people, how they behave with the money. So the market exposes behavior and behavior determines the outcomes. So what you should do instead, if you are starting, so here is what I recommend. Define your goal, define your risk tolerance, start small, diversify, focus on learning before earning. So you don't need to be very, very brilliant. You need to avoid being foolishness. So that's alone puts you ahead. And you should also learn the art of being patient. Okay, if you can avoid these mistakes, you don't need a secret strategy. What you need is you need discipline. Yes, so I hope we are building this properly. If you need any specific topics that I need to focus on, you can let me know. And thank you. Kindly like and subscribe to my channel for more videos.